make sure that everything is sounding real clear because we got a short time to do it, and I got a lot of information to give you guys tonight. So grab your pen and your paper. Grab your pen and your paper. All right, so let's get ready to get started. Let's make sure that the audio and everything works good. I want to make sure that everything is sounding. Oh, yeah. So we already in the game. That's all I had to do was just check and make sure. So check this out, you guys. Grab your pen and your paper. We got a lot to cover and a short time to do it in. So I want to make sure I give you guys this work. So you, as a business owner, you can attack and utilize the best strategies that the wealthy of this country use all the time. Now, these are my top three. These are my top three strategies. I love using these. I use these every year. And so make no mistake about it, these are going to help you too. Now, first of all, these strategies, ladies and gentlemen, let me give you this real brief and quick. These strategies have been used for a long time, hundreds, thousands of times, hundreds of thousands of times. And the thing is, nobody knew exactly how. Can everybody hear me well? Put a 1 in the comments if you can hear me real well. I got the comment section added on. That's this little box right here at the bottom that says StreamYard, to where your comments will pop up, because that's how important this game is. I want you guys to know that that is important. So if you can hear me very well, drop you a 1 in the comment and let's rock and roll. Now, these strategies have been around, and I'm going to show you guys in the tax code where they are. So you will know that I am not making any of this stuff up. And the knowing these is going to help you too. Now, the Augusta rule. That's going to be the first one that we're going to cover. Now, the brief history behind the Augusta rule. The Augusta rule was brought into play by the Augusta golf tournament. Let me make sure that everything is running right. There we go. Okay. It was brought into play by the Augusta golf tournament that is done every year, called the Masters. Everybody has already heard about this. Now, the Augusta rule, man, why is it so dark? I mean, I'm not supposed to be this dark. I promise I'm not that black, y'all. But anyway, the Augusta rule was brought into play by the Masters tournament, right? And doing so, I'm really not that dark. In doing that, the tournament was put into play. So now what happened is they didn't have enough hotels in Augusta, Georgia, to accommodate all of the people that was coming to the Masters tournament. So the city council opened up the floodgates. Excuse me. The city council opened up the floodgates and allowed the homeowners in Augusta, Georgia, to temporarily rent out their homes. I got to put another light up. So, and this allowed the people in Augusta to make money. Now, nothing wrong with that. Great strategy. And doing so, the law passed the Supreme Court in the state of Georgia. Let me get this light plugged up, y'all, so y'all can see me. The law passed the Supreme Court, and in doing so, it passed every state. Now, this is the kicker part about this Augusta rule, y'all. Here's the thing. What passes in every state has a Supreme Court. You guys already know that. Every state has a Supreme Court. And when one law passes in that state Supreme Court, it transfers to every Supreme Court in every country, every state. So the Augusta rule was no longer just for Augusta, Georgia during the Masters tournament. It passed along to every state and every homeowner. If you have never heard about the Augusta rule, your tax preparer is not a tax professional. In this game, ladies and gentlemen, as a business owner, it is your duty. It is your duty as a business owner to pay as least amount of taxes as you can. It is your obligation as a business owner in a capitalist society to pay the absolute lowest, if not completely getting rid of it, tax every year. This is why the biggest argument every presidential election amongst the Democrats and the Republicans, two parties who don't care nothing about you, trust me, the argument is the wealthy need to pay their fair share. We will never pay our fair share because we don't have to. And the law is on our side. Now, this is the thing that I want you to ask yourself the question on, because a lot of people don't even know that this is possible. It's possible because regardless of whatever political party you affiliate yourself with, not one single one of them will ever change the IRS tax code. You can hoop and holler, they can make a whole bunch of promises that they want to and all this kind of stuff, and y'all can fall for the banana in the tailpipe. You can go down that deep rabbit hole if you want to. They will never change the tax code. Why? Because Democrats, even though they're preaching Republicans need to pay their fair share, Democrats take advantage of these strategies too. Think about that. You just don't wake up one day and decide you're going to run for political office. And then once you get in there, you don't learn a few things that the rest of the people don't know about. So the Augusta rule is one of them that we're going to break down and talk to you about tonight. The Augusta rule is renting your home to your business. A lot of you didn't even know that. And it's because of the Augusta rule, and I'm going to share this with y'all so y'all don't think that I'm just blowing smoke. I'm going to share this with you so you will know that this is possible. And it has been on the books for as long as we have been alive. Man, I'm telling you, man. Can y'all see this? I hope y'all can see this. The Augusta rule is tax-free rental income. Yes, ladies and gentlemen. Yes. The Augusta rule, known as IRS as Section 288. Write that down because you can look it up and go read it. How does it work for homeowners? So long as the home you own is not your primary place of business, you can rent it out for up to 14 days and not report that income on your individual taxes. The rent you charge may be reasonable and in line with what the rental market supports. Charging $1,000 per night when comparable houses rent for $200 per night is not considered reasonable. Now, shifting income from your business. If you are a business owner and do not use your home as your primary place of business, employing the Augusta rule can be an effective strategy for moving income away from your business and shifting it to personal income where there would be tax consequences. For example, As a business owner, you host a monthly meeting with your board of directors under the Augusta rule. Your business can pay you a reasonable amount to rent the house to conduct the once per month meeting, provided that the total rental period does not exceed 14 days and rent charges is reasonable. Now, do you guys understand why the Augusta rule is so important? The Augusta rule is so important because the Masters tournament is 14 days. Actually, it's 15. They leave on the 15th day. But for that time period, you can charge a reasonable amount of rent to your business. I mean, write up a lease agreement and everything, or a rental agreement, sign it, notarize it, date it. It gave you an example. Once a month, you can charge a business meeting. Now, it's only 12 days, 12 months in a year. So that's, if you did 1 day per month, that's 12 days, and you still got 2 days left. So one of those months, you can, or 2 of those months, you can add 2 days. So 2, 2, 1 for the rest of the 10. 14 days, ladies and gentlemen. And if you wrote that up, I don't know what the room rates in your city is. You can check and call around and find out. But that, ladies and gentlemen, is a tax deduction and a write-off for your business on how you can shift money and earn extra money. These rules have been around for as long as the Masters tournament has been playing. And I would suspect, ladies and gentlemen, that is over 50 years. See, these are now, when you read this law in the IRS tax code, let me stop sharing. When you read these laws in the IRS tax code, the one thing that I tell a lot of my clients, get out of that mind frame that this is a black and white thing. Shut up. Don't be so petty. Now, again, the floor is open for you guys to ask any questions, and I'll answer them while we're here. Stop being so damn petty that this is a black and a white thing. Man, them white folks ain't gonna let you do this. The IRS tax code is not written in black and white. I mean, it is written in black and white, but it's not for black or white people. It has no race, nationality, color, or creed, or religion. It's for whoever knows about it. The question we need to be asking ourselves, why we were never told about it? Well, that's obvious. Because if you were able to play the game on the same level as the wealthy, then the government would have no choice but to forcibly change the rules. But what happens, ladies and gentlemen, is people get this information and they think that they can come up with a better way to cheat the system. This is why the rule has never changed. You can't cheat a system. See, the system is not designed for black or white. The system is designed for the haves and the have-nots. If you are wealthy, you can pay the people this kind of money to get this kind of information. Oh, yeah. You can pay the people to give you this kind of information. I know several people of means, I mean, affluent wealth. They don't know it, but the people that work for them know it, which keeps them getting richer. Now, the other way to play this strategy is, and I'm going to give you guys another one. Now, the Augusta rule is listed as if the home is your primary residence and you're only renting it out for businesses up to 14 days. Here's another strategy that you guys may not have ever heard of. And this is called a cost segregation study. A cost segregation study. And ladies and gentlemen, the greatest part about this one is you can actually do this yourself, but if you want to make sure that that paperwork is right on time, um, you can get somebody to do it for you. The only thing is, I would still tell you to understand and read and learn what the cost segregation study does, how it works, how you can benefit from that. And here it is right here. We're going to give it to you. I want you guys to read this along with me. Now, the cost segregation study is a study, and I heard Myron Golden speak about this. Myron Golden, if you guys haven't never heard of Myron Golden, you need to go check this brother out. I mean, multimillionaire, very wealthy. I mean, and he don't miss on the information. The funniest part about all of this, ladies and gentlemen, is all of this stuff is on Google. You can Google this. Now, a cost segregation study. You guys, you can take the next 10 years. You can depreciate the value of your house over the next 10 years, and they will cut you a one lump sum check. Myra Golden teaches that you can take a 30-year mortgage and pay your house off in 12. Ooh, man. No refi, no none of that. Now, the keys to these strategies are, ladies and gentlemen, the key to these strategies is you cannot allow yourself to get money drunk. You cannot allow yourself to get money drunk. Because when you start writing these tax deferments off, these tax deductions, and these write-offs off, when that money comes back to you, it puts you in, it lowers your tax bracket. And that's what makes you pay either very little taxes or none at all. Now, I have been saying this for the past 8 years. 8 years ago, when I started doing these strategies, once I learned how to play them, 8 years ago, I had a minimum cap of $200 is all I'm gonna pay on taxes. I don't care how much money I make. Now, somebody's like, "Oh, you saying that on Facebook on a public platform?" Yes, one because of my. Hey, if anybody know me, y'all know I keep my paperwork tight. I still do poor man's accounting, and just started one for this month. I stay on my paperwork. This is the secret sauce behind how all of this works. You got to force yourself to learn how to do that paperwork. I don't like doing it, but when I brought somebody on and hired somebody on to do it for me because I got so much going on now, I know it because now no one can cheat me. I got that from Steve Harvey. Steve Harvey owed the IRS, I think it was 30 million in back taxes because he trusted somebody else to do the work, and they was cheating him. He was writing the checks for the IRS, but the guy wasn't paying the IRS. He was taking the checks and depositing them in his own money. He didn't know that he wasn't even paying taxes until the accountant died. Now, there's a reason why I tell you guys, you need to learn this so you don't fall into the same trap that Steve Harvey fell into. Y'all understand? Now, when we start to read about a cost segregation study, and I'm pretty sure some of y'all have already read this, you can Google search these. This is tell you, number one, I'm not lying to anybody. I don't have anything to reason to lie to you about. And now, a cost segregation study is a tax strategy for real estate investors that involves an in-depth analysis of property assets. By classifying certain buildings, components of personal property, or land improvements, the study allows for the faster depreciation schedule than the standard, here we go, 30 years, which increases cash flow and reduces tax liability. Now, they say 27 and a half to 39 years. 39 years on the top end because somebody's going to refi. Normally, the entire cost of a commercial property is depreciated over 39 years, while a residential rental property is depreciated over 27.5 years. However, many other components within a building have a much shorter lifespan than the overall structure. The cost segregation study breaks down these expenses into different asset classes. Y'all see how this works? The government, Michael Davis, the IRS. Now, the way this strategy works in the cost segregation study is your name cannot be on the deed or the mortgage. What I coach people to do is, if you currently have a home, right? If you currently have a home, you can create, I teach my clients to do this, create you a property rental management company. That's your LLC. Now, with regardless if you like them or not, 47, and I don't like them. I'm just telling you, I don't like them, man. But on the business side, business owners love what Donald Trump has brought back in. That's the only reason I was, man, Joe Biden hurt us them 4 years. But I'll get to that on a different topic. But what Joe Biden took away over those 4 years when he was in office, Donald Trump put it back. So now, what you want to do is quick deed your home to your new property management company. This removes your name off of the deed. Now, some people's going to say, man, that's going to make the bank call the whole loan in. If you go in there and run your mouth and say, oh, man, I sold my home to my business. See, listen, this should tell you guys two things. There's two documents when you purchase a home, the deed and the mortgage. The bank gives you the deed. That should tell you that the deed don't mean nothing. That should tell you the deed means absolutely nothing. The mortgage is the one that has the weight. Now, there is a clause that can be activated if the bank finds out that you have quick deeded the house to a third party. You can't do that. Legally, you can do what you want to, but it will activate a sub clause in your contract that will make the bank, they can, not to say that they will, but they can call for payment in full. That's why you don't go shooting your mouth off. When you start implementing these strategies, ladies and gentlemen, you can't tell people what you're doing. Some of y'all got some secret haters you don't even know that's hating on you in secret. They want you to fail. So this is why you keep that stuff to yourself. You ain't got to tell everybody your business. You don't have to tell everybody your business. Now, if you want to go ahead and do it the correct way and remove any liabilities or any pushback from the bank, go ahead and notify the bank. Tell the bank, hey, look, I'm going to sell this house in this company. Now, here's the thing. This company, which is not created at the same bank that you have the mortgage at, come on, y'all. We got to think like the rich. Do not put all, some of y'all have heard the phrase, don't put all your eggs in one basket. Don't put all of your business accounts in one bank. That is the absolute worst thing that you can ever do in life, is put all your money into one bank. Each business needs their own separate bank. I don't care if you got to drive all over the county. Don't put all your money in the same bank. And when I mean the same bank, Don't put them all in the same bank with the same name. Don't put all your accounts at BB&T. There is no law that says you have to put all of your money in one bank. I coach my clients on getting five. Truist, PNC, Fifth Third. Now you can go Navy Federal or any credit union that you want to do. Any credit union. And on top of that, you can throw in it's a new bank that I've been playing around with. I've been playing around with it for about 2 or 3 months now. But you can throw in any of the smaller, newer banks that's coming on the scene because they are dying for new businesses. They're dying for new business. SunTrust, if you're in the state of Florida, SunTrust, man, SunTrust, on top of SunTrust, give you that bag. But this is what we call building relationships. But anyway, don't put all of your money into one bank. Spread them out over 5 different banks. So your new property management company is at another bank. So you go to the bank that has the mortgage and you say, hey, this rental company has offered me a price to buy my house. Now, to do that, the rental company has its own EIN number. It don't have a social security number. It's a business that's buying that house. But look what you just did. Left hand went to the right hand. Wealthy people, ladies and gentlemen, their name is on. They don't put their name on nothing. I can't stress that enough. Wealthy people don't put their personal government name on anything. The name of the game here is to never own, but to control. Now, I know I lost somebody on what I just said, but let me break that down to you. It don't matter if your name is on the property management company. Who owns the property management company? You're welcome. So if the property management company, not a real estate company, because you are not a realtor, you are a property rental management, different ballgame. You have to learn the language that wealthy people use. When you learn the language that wealthy people use, this puts you in a different field. Wealthy people are keen to words and language and phrases. This is how you know the difference. We have been raised and taught all of our lives. Buy you a house. Put your name on something that belongs to you. Ooh, a hand itching. Thank you. But that tells you right there. That was a trick. Somebody, real quick, when your name is the owner on something, on paper, when you own something, what does that mean? Somebody, real quick. When you own something, what does that mean? When you own something, that means you are responsible, you. When your name, your social security number is on something, that means you are responsible for the taxations. Everything. Car, you got to pay tag, title, taxes. Every year, you got to get that tag renewed. Every year, every month, you got to pay insurance, mandatory, taxes. Coming off your name, your social security number, and if you default on that loan or don't pay that title or that tag, they can take it. Your credit suffers. Even with, yes, you are liable for all the taxations. Now, put your name on a house. ladies and gentlemen, regardless of popular opinion, you never own your house. I don't care what nobody tells you. You missed that. That's the illusion and the trick. So if you miss that mortgage payment, oh, the bank gonna remind you who owns that house. Even if you pay the house off, the bank is out the way. You miss that property tax every year. Then your state, your city, your county, and your state is going to remind you who owns your house. Oh, you own the house, but they own the dirt. Have you ever heard of somebody moving the whole house because they foreclosed on the property tax? I mean, some people that move houses, yeah, they can. But you're going to spend a fortune on jacking that thing up and putting it on the truck. They got to cut it in half. You'll come out better just paying the property tax. All that money you got to pay. So the strategy is, who gets the tax breaks in the United States? Companies, corporations. You as an individual will always pay the bulk of the country's taxations. You as an individual. That is your burden for the rest of your life for becoming a United States citizen. Nobody ever told you that. That's your burden. That's why it's a saying or a running joke. All I got to do, the only two things that's guaranteed is taxes and death. As long as your name is on it. Even after death. If you leave your house, your assets, all of your earthly possessions, if you leave them to somebody in your will, you have just cursed whoever inherited all of your stuff. It's called inheritance tax. Look that up. So, two strategies that so far is the Augusta rule, learning how to rent your house to your business up to 14 days at reasonable rates, which is a tax deduction and a write-off. Two is a cost segregation study, depreciating your house over the next 10 years, getting that one lump sum check. Now, this is the part that I want to tell you guys. In playing these strategies, you can't get money hungry. You can't get money drunk. The way Myron Golden explains it, once you get that check, that entire check goes toward the principal of that banknote. You don't keep none of that money. You don't. You would be it'll be a fool's errand to take that money, that free money, and for you to go and party with it like you ain't never had no money at all. That's people's worst problem. When they start seeing that money coming in, they get money drunk. And it seem like all of a sudden, they just remember, ooh, I ain't never had a Birkin bag. Ooh, I ain't never went on a 7-day cruise. Ooh, I ain't never had a Mercedes Benz. Money drunk. Money drunk. The goal here, ladies and gentlemen, is to get your name off of it as fast as possible. The faster you get your name off of it, the less taxes you would have to pay. We are the most taxed country in the world. Out of every progressive country in the world, nobody pays more taxes than the United States citizen. Nobody. Not one. You're taxed before you get your check, before you even get it, before you even cash it. They have already taxed it 27.5%. Then you get your check, deposit it in the bank, stop by the gas station, fill your car up. Guess what? You taxed again on gasoline tax. Then, oh, I gotta go by the grocery store and buy groceries so I can feed my family. You taxed again. Oh man, I got holes all in my socks and in my t-shirts. I gotta get some new uniforms or jeans for work. You taxed again. And let me tell y'all something. If you got more than $5,001 in the bank, you taxed again. And the bank is the one that called and told on you. Call your local bank. Call the bank, whoever you bank with. Call them and ask them, what is the maximum amount that you can have in your checking account before you stop earning interest and start paying taxes? Some people don't even know that. Which is another reason why you want to have multiple bank accounts, not at the same bank. Not accounts within the bank. You want to have multiple banks so you can move that money around. Now, number three, and this is going to help somebody. All three of these can help you put money back, and then I'm going to tell you why. Number three, get your car out of your name. Sell your car to your business. I just told you, businesses and corporations get all of the tax breaks. However long you have had your car has never paid you anything. You have only spent money going out. You put gas in it, you get the oil changes, you buy tires when it needed, you have it washed, you have whatever the car may need. That is all money going out. This is why a car loses value as soon as you drive it off the lot, especially if it's under your name. If it's under your name, that thing ain't worth the money that you just spent on it. You don't believe me? Buy a car, put 10 miles on it, turn around and take it back and say, hey man, this ain't what I thought I was. I guarantee you they ain't gonna give you what you paid for. Y'all should know that by going to a jewelry store. Go in there. Now you know what you paid for your wife's wedding band or the wedding set. Go to a pawn shop and find out how much you can get for it right now. And ain't gonna be nowhere close to what you spent. Family, what we have to understand is we are in a capitalist society. I said this a little bit earlier. We are in a capitalist society. And that capitalism means this is a country that's set on making money. Every aspect about the United States is built on making money for the country, for the corporations. It's not designed for you to make any money. The system is designed for you to not know or learn these strategies so they can keep making money off of what you don't know. The saying is not, it's who you know. I know a lot of people. It's what you know. And it's not so much as what you know, it's how you use what you know. There are a lot of people who have heard me teaching and talking over the past 8 years, and they have still not implemented one strategy. Not one. Not one time. In the past 8 years, you ain't never seen me miss a beat. Nobody's come after me from the IRS. They did the first 2 years, transparency, full transparency. They did the first 2 years because I had never done these strategies a day in my life. And the first time that I did them, ooh, wait a minute, ooh, they looking at that paperwork. They looking at it. Wait a minute, this dude ain't never what? Oh, we gotta hit him with the audit. Oh, trust me, I was shook that first time. I was like, ooh, boy, these folks done jam me up. That's how your mind works. Man, I'm sitting here listening to these rich people, man. That's how your mind works. Paperwork checked out. Ooh, what? Y'all was right. We told you, Robert. Second year. Second year was they was looking to see if I had did anything felonious. Because 2 years back to back, it should have matched. And it did. First 2 years, didn't pay over $200. See, here's the thing, ladies and gentlemen. We have been getting excited over a tax return. A tax return is the absolute worst thing that you can get. How many believe that? How many of y'all believe that? A tax return is the absolute worst thing. It's not good to get a tax return. Let's break that word down. Return. That means you overpaid. Oh, yeah. You overpaid. Some people even set their W-4s up so they can overpay because they're so scared about not paying or not paying enough. And these people make you wait 12 years, 12 months. They make you wait 12 months to get your money back that you overpaid. I look to pay every year. I expect it, but I ain't paying over 200. I'm not paying over 200. The first time I started using my new tax person, Miss Delta Divine, if you guys need you a tax professional, I'm going to give her a plug right now. The Divine Wealth Services, Financial Wealth Services out of Jacksonville, Florida. Phenomenal sister. The sister knows her business. The best thing that I've seen in a long time. See, you have a tax prepare. I'll get off into that in a minute. But the first time she started doing my papers, sent her everything, she said, Brother Robert, she said, you gonna owe these folks $10,000. I said, I started laughing. I said, no. I said, sister, I told you I don't pay over 200. What do you need? She started telling me what's needed. I'm just emailing. Boom, 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 boom. I said, hey, check your email, man. Let me know when you get me down to $200, man. See, and I'm going to tell you how some other things you can do that'll get you there. So she hit me back about a week later. She said, boy, she said, I don't know what you did. She said, but I got to know. I got to know. I said, how much do I owe? I knew I owed. I said, how much do I owe? She said, $110. I said, I'll write the check right now. She said, don't write it to me, write it to the IRS. Hey, and I can show y'all paperwork. I ain't got to lie. I can show you paperwork. That check was $110. I told you, I look to pay. Now, here's the caveat. That year was one of my best years. I did $143,000 that year. This was 4 years ago. $143,000. I was a year into Florida, just getting the businesses on everything set back up. and I just fully stopped working a job for somebody else. That's $143,817. Out of that, all I had to pay in taxes was 110. Now, y'all tell me which one is better. Who came out on the better end of the stick? Somebody who overpaid $2,000 or $3,000 and they got a check back, or somebody who got to keep all of their money during the year? During the year. If not during the year when you need your money, not in February or January or March of next year. JG Wentworth, I want my money. I want my money now. But we have been conditioned so bad that we think that little return, and see, some people be thinking, man, that little $2,000-$3,000 and that little earned income credit and all that stuff, man, they think that stuff, I get all of that stuff plus. An example, if your car is not paying you $10,400 a year in tax deductions and write-offs, you're doing it wrong. And that's just with oil changes. Joe Biden upped it to 74 cents a mile when he was in office. You are allowed 4 oil changes every 3,000 miles a year, right? That's just an oil change. Y'all do the math. Do it at your house. Do the math right now. That's 4 oil changes every you get one every 3 months, every 3,000 miles, which is 4. 4 times 3 is 12. Multiply that by 74 cents. Under the IRS tax code, that is a taxable deduction. Not on your personal vehicle. See the caveat? I mean, that's not the caveat, but that's the other edge of the sword. Under your personal name, you can't write that off. If that car is under your name, you can't write that off. The business is the one that gets all the deductions. This is why I said sell your car to your business. Now that car becomes a tax deduction and write-off. I don't care if you just getting it washed and waxed. If they'll print you up a receipt, you can write that off. And all you have to do, ladies and gentlemen, is look into the tax code. Don't take my word for it. Don't believe nothing I'm telling you. Go and read it for yourself in the tax code. Don't listen to somebody who can't take you where you want to be or hasn't done what you're trying to do. They can't tell you. Not even the person who is doing your taxes now. Because if they knew, they would be able to write off their car. There's a difference between a tax professional and a tax preparer. A tax preparer they take your W-2 or a W-4, and then they transfer this number or this line to this line, this line to this line, this line to this line. That's all they do. You can do that yourself. But we tell ourselves we can't do a regular 1040 easy form. It tells you what to put on the line. Jesus, why nobody's doing their own taxes? I don't understand. Especially as an individual. Man, I got children. They have both of y'all can't claim the tax credit for your children. Both parents can't do it. Only thing they're gonna tell you, oh man, you can get 2 pair of boots a year. What? Every pair of shoes in my closet is a tax deduction and a write-off. Not just 2 pairs of boots. All of my clothes are tax deductions and write-offs because I use them in the cause of my business. Even these t-shirts, nah, I'm good. New shirt on the new line. tax write-off because I promote and I market all of my wares and goods. Cars, 100%. Now, here's the thing that Joe Biden got rid of, what we called buying a free car. He got rid of it. He brought that thing all the way down to 60%. Ugh. Man, I hated Joe Biden. Because you couldn't buy a free car no more. That's when they called it, some of you guys might have heard the term, buying a free car. That's been on the books since George Bush Jr. was the president. He the one that made that law possible when gas first started jacking up high. Now, there are some things that you got to fit the criteria. One, the vehicle has to be 6,000 pounds. That's the criteria. And it has to be used for more than 50% of your business. Here's the thing. I live my business every day, all day. Any car that I'm in is for my business. This is why we put we label or tag. Some people do a full body wrap on their cars. I advertise my business 24/7. I don't care if I'm at Walmart. I park down there on the end and I take up 2 spaces. And I park that thing cattle corner because I'm advertising my business. Whoever bends that corner right there, boom, they can't help but see my car. If they can cuss me out, be mad that I'm taking up 2 spaces, they're going to remember that Premier Leathercrafter truck. Somebody at Walmart might want a custom leather belt. Somebody at Walmart might want a custom leather guitar strap. I wish you guys could see some of my wares and stuff in here. You have to look on my Premier Leathercrafters business page. I'm right here on Facebook. Y'all can see it. I don't care if I'm on a date. Guess what we driving? My truck. Why? Because my truck pays me to drive it. The majority of people didn't even know that that was possible. So is it used for more than 50%? I have satisfied the criteria. 6,000 pounds, and it's we use 50% of the business. Now, not only has it been used and demonstrated as used for 50% of the business, I also could get to collect the marketing and advertisement taxation on it because it is a rolling billboard. So the money that it cost me to have it labeled, I get that back. And why would anybody who have a business not be out promoting your business 24/7, even if it's parked in my yard? Anybody who comes down through my neighborhood, boom, I'm advertising that thing 24/7. I have satisfied the IRS. What we have done as a people is, you gonna pick me up in that truck? Yeah. My truck pays me. And for being in that truck, we going out to dinner. Now you're forcing me to talk about business, so now I can write off 50% of this bill. Y'all didn't know. As a business dinner, when you talk about business, you can write off 50% of that bill. Why wouldn't you want? If you married, you ain't gotta tell your wife what you're doing. I'm pretty sure she's gonna be happy. So when I tell people I go to, I tell them I'm transparent. I go to a 5-star restaurant once a month. That's how I treat myself. Once a month, I treat myself to a 5-star restaurant, and I get to write off 50% of that bill. God knows it's high. But one, I'm in there networking. Two, I'm in the experience. It's the experience. Don't let nobody tell you a steak is a steak. Oh, no, it ain't. Man, until you had some wagyu that you can cut with a fork, no steak knife. It ain't no saw in there over here. I got 4 restaurants that are my favorite down here in Florida. And I put them in rotation so I don't get burnt out on eating the same thing all the time. Now, you can do how you want to do it, but I treat myself for being disciplined, focused, and diligent every month. I deserve that. I go to a comedy show, I go to a good steak, and I'm back at home on the grind. So for those 4 hours, that's my payday. Now, why did I tell y'all all of this? One, these are deductions and tax breaks that you can start taking advantage of right now. If you are a business owner, right now. The month of September, some start in August. So from August to December, this is the tax season for business owners. Why? Because we are looking for ways to lower that tax bill. Grant Cardone has a remarkable video out of how he shows how to take $189,000 income all the way down to 11,000. Ooh. Do y'all know what $11,000 income is according to the United States government? Anything below $15,000 is under the national poverty level. Now, Grant Cardone is a billionaire. You ain't got to like it. You don't have to like it. I don't care if you like it or not. I play the same strategies myself. When he did it, I made sure I watched it because that's the number that I hit last year. Well, I'm gonna definitely hit it this year. I need to get down off of that 200,000 down to 11,000. And this is how he did it. It is your job to find a way to erase $175,000 in earned income. And the one way that we do this, ladies and gentlemen, is invest. Investment money is untaxable because you didn't earn it. Remember when I told you, you are only taxed 2 ways. You are only taxed on what you own, that's under your name, and what you earn. Investment money is not taxable because you didn't keep that money for yourself, you invested it. Not spent it, invested. There's a difference. We got to learn this. Again, we need to learn the language. Spent money. The IRS don't care nothing about what you spent because you claimed it as owning. That's what allowed you to spend it. Investment money is something that you are taking a chance on, a gamble on. You haven't made any money off of it yet. Now, a lot of the wealthy people, they invest their money into properties. You can do that. I invest my money into creating new businesses. That's how I play the game. How else you think I have 8? How many years did I tell you I started doing this? I started doing this 8 years ago. Every year I open up a business. And I take that money that the one business made and I invest it into another business. I ain't made no money off of it yet. I don't know if that business is going to make money or not. This is how you get off of that $200,000 earnings and break it down to 11. You ain't gotta like it. It's no. To some people, I agree with you. Is it morally right? I don't care. I really don't. Do you think any? You think you definitely Elon Musk don't care. Donald Trump definitely don't care. Bill Gates, Jeff Bezos, none of Warren, but none of them people care. If it's morally right, it ain't my fault that you don't know. But now you do. So if you feel some type of way that I'm going to pay less in taxes than some teenage kid flipping chicken at Popeyes, that ain't my problem. That's your problem. The law says I can do it. It's what you know and how you use what you know. There is not a bank in America that has my personal name on any account, other than the fact that I am the authorized signature to deposit and withdraw money in the interest of the business. Is that my business account? I don't own nothing. You can't make me say I own nothing. See, when you start understanding and learning the structure and the powers of the LLC, a lot of people don't even fully know all that it is about an LLC. Limited liability. Stop right there. Just learn what limited liability is. And then some people are in so fast to become that CO and INC when you don't have to. You can go S Corp or C Corp before going there. You don't have any employees. Even the Small Business Administration, you don't have a small business. Well, technically, you got to have at least 75 employees with an average annual income of $10 million. That's a true small business. If you're a one-man army, you're not a small business. You are a business owner. You have to learn these words and these phrases. Force yourself to. This is your livelihood. There is nothing in the law books that says you have to earn an income. Well, how you pay your bills? I don't have any bills. There is not a bill that comes to this house in my name. They are owned by the company. So why am I out there paying bills? If I started paying bills, that means red flag. Where'd you get money from, Robert? I thought you don't earn an income. Well, on the IRS, you haven't received an income in 5 years. How I don't earn nothing. I have a contract with a company. I'm a 1099 contract worker. The company said they can't pay me what I'm worth, so they agreed to pay my livelihood. The company had a company house. They allowed me to stay in it. The company has a company car. They allowed me to drive in it. As long as I do the performance of the duties that I was contracted for, then they allowed me to use the truck, use the clothes, use the cologne. Hey, you guys, Grant Cardone did this. Grant Cardone had to erase $150 million earned income. Guess what Grant Cardone did? Grant Cardone called up a private jet company and said, I need a jet. They told him, we don't have one. He said, I need a jet next week. He said, the guy told him, we don't have one. He wired them $20 million as the deposit. Guess what that private jet company did? Found him a damn airplane. Now look at what he did. This is powerful. This is how the wealthy play. Not only did he erase $150 million earned income that year, he erased $150 million the previous year and the year that was coming up under bonus depreciation. That jet weighed more than 6,000 pounds, didn't it? And guess what he did? Cardone U 10X. Put it right there on the tail. That's Grant Cardone's brand, 10X. Company airplane. 20 million erased 150 million. Now, this is how the wealthy play the game. Because you got to pay for that pilot, whether you flying that plane or not. You got to pay for that airplane hangar, whether you flying it or not. So way wealthy people play it is, and if you look at it, it's smart. If Grant Cardone is flying from Miami to Texas, Dallas, he would call up some buddies of his and say, hey, man, y'all doing anything this weekend? Nah, man, we got to fly out to San Francisco. Hey, look, I'm going to be flying into town. Y'all want to use my jet? Y'all can rent my jet from me. Now, Grant Cardone's trip from Miami to Dallas is free. Pilot paid. Now, he picks them people up in Dallas. They fly to San Francisco. Guess what Grant Cardone is on the phone doing? Or somebody in his office is doing? They're trying to find somebody over there in San Francisco that's trying to fly to New York and give them a rental price. Hey, man, we're flying in Grant Cardone's jet. They fly from San Francisco to New York. Now, guess what somebody else is doing? Now, that's the first trip to Dallas paid Grant Cardone, broke him even. From Dallas to San Francisco, he's making money. From San Francisco to New York, he's making more money. Now, his trip is over with in Dallas. He got to find somebody that's flying from New York to Dallas. Now, see how this works? Not only did he just get a fully tax write-off on the airplane, now the airplane is making him money. Did anybody catch that news segment when Sean Combs was in prison? His private jet made $400 million while he was locked up. We got to stop thinking about making money or buying stuff to impress other broke people. We got to start looking at buying stuff to make money. I gave you guys that analogy. The first time when I bought that Jaguar, I was proud of myself because my book just went bestseller. We're finna log off right now. I bought that Jaguar because I was proud of myself. The book went bestseller. Took that check, did the dumbest thing I could do. Went and bought something and didn't know. This is when I first started out. But when I got down here to Florida and I bought that Bentley, I knew then that Bentley was to make money and not to drive for personal. I've driven that car 3 times. 3 in 2 years. That car makes me money. Well, how it makes you money? You can buy something and there's an app called Turo, Turo. Just go on there and look. You will see all kind of exotic cars. Everything from Bentleys to Rolls Royce to Colonnades to, man, you will see all type rich folks renting out their cars. Nobody want to be. That part of my course is called Other People's Money. Other people's money pay me for me to live the life that I want to live. And it don't come out of my pocket. Is it morally wrong? No. Somebody wants to drive a bit. If it's anything, y'all, rappers are a dime a dozen. You can throw a rock in any direction and you're gonna hit somebody that think they're the next big rapper. They shoot videos. Hey, he want to be riding in the Bentley on the video. How much is that? $200 a day. Easy. It's easy money. It's like taking candy from a baby without the baby even crying. $200 a day. Crazy. What people will spend to live a fantasy life. This is how the wealthy play the game. And on top of that, by it being a business company car, 100% tax write-off, and I ain't paid for nothing. Y'all, if you want to learn these strategies, and there are a ton, there are a lot. You want to learn how to write your vacation off. We don't call them vacation, we call them business retreats. You want to learn how to write your birthday off. This is the time for all business owners. From September every year, we look for ways to lower that earned income, erase it, and put us in a different tax bracket so we don't have to pay. This year, I ain't paying nothing. Well, 2026, I'm below the national poverty level. Now, we invested. Now, instead of one business, we're going to open up two businesses. Split that money up. Boom. If you guys want to learn these strategies, man, this and plenty more. And I'm not the only one teaching it. I don't want to say that if I'm teaching you some kind of special thing that's not already out there. If you really, actually, you can do this on your own. If you study and read. Everything that I told you guys, the 100% truth. If anybody has any questions or if you think that I may have told you something wrong, hey, drop me an email. Call me. My number is on the thing because this is how I eat. Tonight's show, ladies and gentlemen, was brought to you in part by Fragrance Club. The Fragrance Club, another one of the business started. Fragrance Club, the Fragrance Club, where we feature different various fragrances. You don't have to spend a fortune in order to smell like you're worth a fortune. This is what we do, ladies and gentlemen. Started a fragrance business called a Fragrance Club. If you want to know the top quality dupes that's all over the world, Lattafa brand is knocking them out the park. There, for every expensive $400 bottle of cologne, there is one that's worth 20 and 25. And I'm not talking about them Mary Kay or Avon colognes. That stuff that toilet water. These are all parfums. Parfums. These two new ones that I just got in. I gotta sign off and do a video on these. So if you guys want to check out the video, I'm gonna be doing a blind review on these two tonight. So just check back onto the Facebook page, and I'll see you guys on the other side. I am your favorite info plug, plugging you in with the information you need in order to help you be a little bit more successful. I'll see y'all on the other side. Peace. Give me my theme music. I kind of like when he do it. Give me my theme music.